Guess who's back? Back again. Charts are back. Tell a friend. Yeah, I'm Eminem. I'm Eminem, the world's greatest white rapper of all time. But yes, today, guys, it's been many, many months. But on today's live stream, I'm going to once again take a look at the top 10 coins by market cap. And today we're going to do it a little different. I've pulled up a blank chart for all of them so that we can start fresh from scratch. You guys can see how I would approach a chart for the very first time if I was actually looking for trades or to understand the trend, which should be fun. But first, of course, it's Wednesday, which means I've got Suren from Bullish to talk about liquidity, depth, volume, all the important metrics to give us a gauge of what's been happening in the crypto market over the past few weeks. And of course, the news. I did miss yesterday's stream, so today's has a lot packed in. You do not want to miss it. Let us go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and take your angry comments about the crypto market and slam them onto the like button. I can see you guys already going, great day to pick to do charts, man. The market's dead. It's horrible. It's over. Well, I was gone for like 10 days, and I just feel like looking at some charts. And you know what? You got to also use them during bear markets, not only during bull markets, but this is more of course, an educational exercise, figure out what's going on with the market. Of course, I mean, charts are basically astrology for men and occasionally for women. We know that they do not tell us what's going to happen in the future. They merely give us a reason to place a stop loss and decide where we're going to take profit and maybe show us where human beings are likely to make terrible decisions. A chart, after all, is just a visualization of human emotion. Visualization of human emotion. Support, resistance, supply, demand, all those things are just because people are placing their orders there. And you're basically just trying to make a good decision where other people are trying to make bad decisions. But we will get into that a little bit later. Of course, I did miss yesterday. I'm sorry about that. We kept delaying it. I was stuck. It was a pretty, it was my fault. We had our kids meet the teacher day. So I went to meet the teacher day. I forgot to bring my own car, which was the plan, so I could get home. Then I called an Uber. Then I got almost all the way home in an Uber and realized I had the car keys that my wife needed with the kids in my pocket, had to Uber back, and then it was 10 a.m. So no stream yesterday. Totally blew it. Probably has nothing to do with my insomnia and half functioning brain. But anyways, it's time to bring on everybody's favorite guest, our most regular guest, the guy who's definitely at this point been on here the most. Suren, welcome. How are you?
Good to be here again. And good to be a regular guest too.
I'm the most regular guest. You probably now, I think you've probably passed anyone else. So listen, let's dive right into it. Obviously, over the past few weeks, I was off. We've had sort of a bit of bullish sentiment, I think, coming back to the market. And I think a lot of that has been somewhat focused on Ethereum. Last we spoke, Ethereum volumes were way up and Bitcoin volumes were way down. But from what you sent me today, that might not be as much the case now. Is that correct?
That's right. There are some interesting things going on with Ethereum over the last 2 or 3 weeks. There are positive signs, obviously, such as the price action and the inflows. We've seen some significant inflows into Ethereum funds. But interestingly enough, on the liquidity side, specifically on the market depth side, there's been a decline of about 25% in the depth of Ethereum markets, whereas in Bitcoin, actually, it increased by about 20%. So there are multiple things that can explain it. One is just the sheer run up and the potentially overbought levels that it reached, like RSI over 70% for ETH or ETH BTC rather, RSI 70%, or I should just say 70. That can be a reason. There are other factors. For example, volatility of ETH. If you look at it as a spread to volatility of Bitcoin, that spread has widened a lot to about 40 vol points, with BTC volatility at about 50-55% on a rolling 30-day basis, whereas ETH volatility is over 100. So that's the spread is the widest this year. And so with such high volatility, market makers may potentially have less of an incentive to provide liquidity, just because they're more likely to get hurt in this situation.
Right.
So and yet another reason potentially is that the balances of ETH on the exchanges have fallen in the last couple of weeks, having run up in the month or two before that. The last 2 weeks have been actually a decline. So fewer balances on the exchange may also mean a lower depth.
That's a good thing, though, right? I mean, in theory, there's various reasons, of course, but I mean, you want to see supply being removed from exchanges. It's a decrease in supply with increasing demand for the merge.
Oh yeah, from a price direction, it's a good thing, definitely, to see lower balances. From the volatility perspective, though, a lower depth may mean more choppy price action.
Right.
So whether it's up or down, less liquidity, if you get some sort of a hiccup with the merge, for example, or something like that, it might react more violently than it would, well, about 25% more violently, because the depth has fallen by 25%.
Right. So small moves could trigger bigger moves because there's just not as much in the book.
That's right. That's right. And yet the final factor also is for balances to decline is maybe going into staking ahead of the merge, right? That's a possibility also. So those are the potential factors for the depth to explain the depth decline of the last 3 weeks. But watch this space. And also, just as far as other depth metrics like the bid ratio, the ratio of bid depth to bid plus ask depth, that one has stayed above 0.5, which is a positive sign for both BTC and ETH over the last 3 weeks. But interestingly enough, in the last couple of days, for ETH, it has dipped below 0.5. So may not, just slightly, 0.48 or so. May not be much to read into it, but it's a potential sign. Ever since it got rejected at 2000, you have a little bit of a decline in the bid ratio in ETH. So mixed bag, some positives, some negatives, and some just increased uncertainty. That's
what about volumes in general over the past few weeks? Have they increased, decreased, kind of stayed the same? I mean, usually we see, August, July, these are the deadest months of the year for volume historically.
Yep. Definitely. Spot volumes have been slightly lower in August compared to July in both Bitcoin and ETH. But last week is actually a little bit higher volumes than the previous week. So kind of the momentum is a little positive week on week. Derivatives volume has also increased in July as the open interest on Bitcoin has grown as the price recovered by about 15%. I think it stands at about 500 K BTC in the futures. And also the ETH options volume has surged. A lot of people buying up strikes, like 3,000 strike calls. And so actually ETH options activity has surpassed BTC options activity for the first time, according to our Bullish Insights research, which is, we publish, people can see it on our Twitter. But I just noticed that they spotted this little tidbit that options activity in ETH is now greater than BTC options.
Yeah, they've been seeing that across the board on most exchanges that offer futures, which is, it's pretty astounding when you think about it. But I guess we'll have to see what happens after the merge, right? Is this all just in the hype because the merge is the thing right now? So of course Ethereum's getting all the focus. I wonder what's going to happen after the merge, if that's going to decrease or not. You just mentioned Bullish's research. Do you guys have any particular thoughts? I know you're not making projections on behalf, but of what will happen after the merge?
Yeah, just a general kind of optimism that it's obviously a positive point for ETH. Having been added for the last 6 years, we're finally here with the merge, and it's not obviously the end of the road. There are still many things they need to do. Like this merge will, it'll solve the proof of work to proof of stake change, but other things like transaction fees and the throughput capacity, those are still to come in the years to come. And also, of course, the staked ETH will not be able to withdraw for for a few months after the merge. So some exchanges are taking precautions on that. Overall, we are positive in our bullish insights, but also just seeing the rise in the client interest in ETH as an asset. And one last thing, you know how in the previous times we met, Fed played a big role because the interest rate uncertainty. Well, with the Fed on vacation still until I guess for another month or so, until September 20th or so, we have a smaller correlation to the fiat markets, to Nasdaq, to S&P. The correlation of Bitcoin is at a 4-month low at about 0.45, and it reached that low a week ago and has sort of stayed steady there. So with FOMC sort of on vacation, merges the new Fed, so to speak.
Yeah, I love it. All right, well, thank you so much, sir. And as usual, we'll see you back in 2 weeks. Hopefully, I mean, as the merge approaches, two visits from Suren away, we will be right in the middle of the merge, I think, here. So it's going to be really, really exciting to see how this plays out. And maybe we'll be able to sort of review what all these metrics really meant, sort of in hindsight with this ramp up. Thank you, as always, for sharing your time.
Thanks a lot. Good. See you soon. All right.
It's funny. I see a lot of you guys over here just randomly in the comments talking about ARK and Coinbase. It made me, while Suren was just talking at the very end, to pull up the chart. It's pretty astounding. It's pretty astounding. I gotta share this, guys, with you before we do the news. But if you guys remember, Cathie Wood of ARK, her cost basis, I think, at ARK was $270 on Coinbase per share. They bought millions, like just under $100, and then sold at, I believe, 58. That's down here. It's now 85 and had reached a high of 116 just, I don't know, last week. If ever there was proof that nobody knows what the fuck they're doing, it's probably the fact that God tier analyst, trader, and investor Cathie Wood effectively puked almost the dead bottom. People were saying she sold the all-time low. Not even close. 40 was the all-time low. That reporting, again, I'll rail against fake news here all the time. But she did sell at 58, which was pretty low. But it got down to 40. 58 was nowhere near the all-time low as being reported across financial news that she had sold it. But it's just pretty crazy. To be frank, my analysis was when she was selling at 58, which was right here, that it was, I don't know, going to go up. Had this, the gap here that is now filled. This actually now looks like Coinbase is kind of flagging. I mean, if we believe that crypto could continue up and we believe that the stock market could continue up, that's up to you to decide to believe. This does have a descending wedge, so a breakout here would target around that 116 area. Again, this key area. I wasn't even planning on looking at the Coinbase chart, but just seeing you guys commenting on it, absolutely hilarious. By the way, I mean, in other news, if you take a quick look before we go into the news at the Dow Jones, which I'm not going to do on the chart, the Dow Jones is roughly, I haven't seen the open today, but yesterday was 7% off the all-time high. The depths of this bear market where tech stocks have been absolutely slaughtered and QQQ and the NASDAQ were actually getting murdered, Dow Jones is only 7% off the all-time high. 7% off. So I don't know. I was really astounded when I took a look at the chart and thought about that, because holy shit. That's not even a bear market. That's just 2 bad days, right? That's one bad day in crypto and stock market. The Dow Jones, at least not on the tech side, is back fully. But let's dive into the news real quick. I'm going to do the fast news, and then we're going to dive into the top 10 coins by market cap, looking at their blank charts, as I said. Is equities pumping bad for crypto? Fed won't stop rate hikes. I don't think it matters. Right now, if they're correlated, things going up seems like a good thing, and I'm not going to try to make it into a bad thing. FS Insight. This is from Fundstrat, of course, Thomas Lee. Ether may well surpass Bitcoin's market cap in 12 months. If the blockchains merge occurs as planned, oh God, let's hope that happens, right? If it occurs as planned, the Ether issuance rate will drop and daily selling pressure will reduce. The firm said the reason that they're giving that it could surpass in market. By the way, who gives a shit if Ethereum has a higher market cap. They're different assets. Doesn't matter to me at all. I don't give a shit about the flippening. I think the whole narrative is stupid. Bitcoin is Bitcoin, and then there's everything else. And it doesn't really matter what their market caps are. But the reason is obviously the switch, the merge that's coming. And that's because the inflation rate of the supply will decline. As you know, we've had days where Ethereum has actually been a deflationary coin. And of course, that there will be no more miners, and therefore there will be no more miner selling pressure, which is a huge aspect of the price movement of proof of work coins. I'm not saying proof of stake is better or worse. I'm just saying there won't be a shit ton of Ethereum sitting in miners' wallets ready to sell anytime they have their period. Man periods, probably, because we know there's probably 3 female Ethereum miners on the planet. So we're talking about the periods of men. Men can have periods and get pregnant and do babies now. And so I'm not being sexist or discriminatory in any way, because judging by the comments, a lot of you men have periods. Although maybe it's bad to even imply that a period gives people bad moods. That's probably sexist in some way, and I'm going to get canceled. But yeah, that's what they're saying here. They're talking about man periods. Crypto investment firm CoinFund launches $300 million Web3 fund. While all of us are crying about bear markets, venture capital firms are being launched and are raising casual hundreds of millions and billions and hundreds of millions, trillions of dollars to invest in play to earn and jump to earn and nap to earn and yawn to earn and sex to earn and blink to earn if you're okay. We can earn doing all these things. But honestly, Web3, people say it's dead, metaverse is dead, NFT is dead. Well, institutional investors certainly don't think so. Yet another massive fund being raised here by CoinFund. Crypto lender Celsius on pace to run out of cash by October. That sounds bad. The firm, which filed for bankruptcy protection in July, is also short of $2.8 billion in crypto assets. The court filing reveals. Well, that sucks. And Celsius sucks right now. Mashinsky, he sucks. Right? I didn't even get to report on the fact that apparently at the Fed meeting, I think it was back in January, apparently Mashinsky, listen, I've had Mashinsky on the show many times. I was hoodwinked to some degree myself. Pretty clear now looking back. We have to admit we were wrong. But he apparently decided he was going to take over the trading desk at Celsius and sold a fuck ton of Bitcoin ahead of the Fed meeting in January because he thought he could predict the direction, and then literally that's customer assets and literally had to buy it back the next day at a massive loss because he was wrong. That sounds bad. Well, either way, they're about to run out of cash by October, which is funny because they don't have a fucking functioning business anyways. What do you even need cash for? You're bankrupt. Yeah, the answer is to pay lawyers and to continue to paying your staff. But oh my gosh, they're going to run out of money in 2 months, but maybe not, because they've been approved to access mine Bitcoin to meet operational expenses, meaning that the 6 Bitcoin that they probably mined ever, they can now sell. Great. And help sustain their business probably till Halloween, 2 weeks longer. I don't know how much longer. I haven't looked. But they obviously had these wild plans to use their mining business to get them out of bankruptcy. But now they're literally just going to have to sell the Bitcoin that they did mine just to be able to operate the business for a little bit longer. I would say that that's not great. Not great. Let me see. You guys got all kinds of comments, right? Ripple, Celsius, sex to earn. Yeah, sex to earn is already a thing. So you guys are asking sex to earn. There's literally things being created where you can have sex to earn. Yeah. Anyways, let's continue on with the news so we can get to the charts. Crypto custody firm BitGo to sue Galaxy Digital for abandoning $1.2 billion merger agreement. You may remember that probably a year ago, the biggest merger at that time, not the biggest anymore, being announced ever was that Galaxy, Mike Novogratz, Luna tattoo guy, his firm Galaxy was going to buy BitGo for $1.2 billion. A massive acquisition, being that BitGo is one of the biggest custodians in the space. Well, they decided later not to do that. Just this week, it was announced. Galaxy said they were not willing to show us all of their auditing and financials. BitGo said, what the fuck are you talking about, bro? We totally showed you all of our financials. And now, because they canceled it, BitGo is suing Galaxy for $100 million. Very reminiscent of Elon Musk and Twitter, but something that people care a hell of a lot less about, because people actually care about Elon Musk and Twitter, and the hissy fit bitch slapping fest between Bitcoin billionaires probably less interesting to mainstream media and to actual human beings that read the news. We'll see how this resolves, but what's important here is that BitGo will not be owned by Galaxy after all this time. Acala stablecoins near dollar peg after community burns 1.2 billion AUSD minted by exploiters. You guys may remember that I reported on Monday that a 1.2 billion of these stablecoins were printed out of thin air due to a hack, and it took the peg down to the thing, and they got pegged, and then there was the stuff, and there was a hack and an exploit, and oh my God, we could just literally report the same story over and over again and just choose like a new project to put it in. We have unstable coins. Stop calling things stablecoins. Listen, we all love Betty. She's been on the show a number of times, but Acala, this was a major failure. But guess what? They actually managed to resolve this to some degree by burning 1.2 billion coins. This community decided this is way to go, and getting the peg back to zero. So repegged. That's basically the news on this one. And of course, big short fund manager Burry dumps portfolio, buys prison stock. Sounds bad. I don't want to go to prison. But yeah, he literally dumped. This is the big short guy. You know, the guy from the movies and the places and stuff. This is what they say he wrote. Can't shake that silly pre-Enron, pre-9/11, pre-WorldCom feeling, he wrote. And which was a 75% decline in the NASDAQ at that time. And apparently he's super bullish on privatized prisons continuing to make money, which is probably the worst part of anything that's happening in America at all, period. Honestly, like, cool movie, but fuck this dude. I'm over him. Burry betting on the 87,000 IRS agents. I read that is not actually fact about the 87,000 IRS agents. They are getting $80 billion in funding or whatever it is over the next 10 years, but it will not primarily be. I think that's actually just fake news. Chart Buttcoin, please. It's tanking. Chart Buttcoin. Buttcoins. Things aren't dumping. They're going on sale. FTFY. What does that mean? Fuck the Fed, yo. Fuck the Fed, yo. That's what it means to me. Anyways, Burry. We're going to Burry. Okay, guys, we're there. Christian Bale. Did you ever see that thing that was like Christian Bale? That was one of my favorite things because it's hard to see. Yeah. Anywho, let's start looking at some charts. So as I said, guys, this is what we're going to do. And, you know, maybe later, whatever that is. This is the top 10 coins by market cap, but like three of them are stable coins: USDT, USDC, and BUSD. So I took the next three. So we're going to go all the way up to Avalanche to get you 10. Bitcoin and Ethereum, I didn't feel like taking a blank chart because we've looked at them 1,000 times. We'll take a quick look, but the rest I pulled blank charts. I'm not saying there's going to be trades there. I'm not saying there's going to be anything excellent. We're just going to chart it together. Take a look. We can discuss why I'm doing it, why I see it, what I think it means, and then we can move on with our lives. Because kind of like, yeah, who cares? Right? Anyways, we doing the top 10, bro. We about to do this. I know it took 26 minutes of streaming to get here, but we're about to do this. So first, here they are. We're going to do Bitcoin, Ethereum, BNB, XRP, ADA, Solana, Doge, DOT, Shib, Avax. Right? And then we'll see what we have time for. And of course, look at Coinbase. Ha ha ha, Kathy Wood, you're an idiot. Second. All right. First of all, the Bitcoin Weekly. Oh my God, it's dumping. It's over. We're finished. Can't believe we're dead. We're not. First of all, when in doubt, zoometh out. So that's in the Bible. It says that. God was talking to Moses. People don't realize when you say when in doubt, zoom out, God was talking about the Israelites having to walk 40 years in the desert when they thought it would take like 40 minutes to walk. You zoom out, it's going to be 40 years, bro. 40-year chart. Anyways, here we go. First of all, let's take a very quick look at the weekly Bitcoin chart. High, low, lower high, lower low, lower high, lower low. There ain't shit to talk about unless we break 32,375. Everything here is just annoying. This is where a bear structure would break bullishly if we had a higher high. Everybody has a different definition for bull market, bear market, what it is, but most people would agree that bearish market structure, which can, by the way, if it's short, is a quick bull flag. But something like this is when you're making a series of lower highs and lower lows, you need to make a higher high. That's what would break this trend for me and for many people. Of course, we spent 7 weeks, 6 total closing, 7 weeks though, below the 200 MA on the weekly. We'd never spent more than 1. And now we are in our 4th week above it. So we're going to continue to probably see it tested as support. That's around 23,000 right here. That's basically what's happening. This is a weekly candle. Too hard to judge yet what is happening with that. I don't know. Let's zoom in on the daily. I haven't even looked. Listen, maybe we'll take a look at it on here. 4 hour. It's a good place. We look at it on the 4 hour. I'm not sure. Maybe this here. This is what I'm looking for. Nope. Anywho, 4 hour chart right here. I closed a bunch of charts to make fresh ones. Right? From the bottom at 17,600, we have a series, the opposite. Higher highs and higher lows, right? Higher low, higher low, higher low, higher low, higher low, higher low, currently a higher low. All these have made higher highs, and they've done it without any bearish divergence on these lower time frames, which is interesting. So this is actually, even though it's dropping right now, you still have a local bullish market structure coming off the bottom. Now, some people would say this is a rising wedge. People would call it a bear flag. That would be wildly incorrect. It's way too long to be a bear flag. But we certainly have some sort here, ascending, broadening wedge. People will draw it different ways. Some people will use wicks. Some people, just kind of cut through it like this and say, hey, those are the first 2 points. People draw lines in a lot of different ways, right? If you're drawing from the first low to the second low, then these are just deviations and the idea remains the same. You could do the same here, right? But the idea being that you have some sort of ascending structure, but what matters is if wherever you draw your support, if that ends up broken and that breaks down. For now, we just continue to make higher highs and higher lows from the low at 17,500. Local bear trend coming out of local bull trend coming out of a bear market. And what's interesting is people freak out about these. Oh my God, it's ascending wedge. It's an ascending channel. It's going to break down. There's literally almost no other way to come off of the bottom of a bear market than some sort of ascending pattern, right? Price has to go back up. Think about it. Think about it. Yeah. I agree, too long for rising wedge. But like Peter Brandt, I saw he just drew like the other day. Oh yeah, that was wrong. He just took a rising wedge like here or something. Right? Excuse me. He was like, oh, we have a rising wedge off and he ignored the first, which I would never do. He ignored all this price action, said this was the rising wedge, which he'll now tell you is breaking down. To me, that's a little fishy and kind of choosing a random spot. But if you did draw it that way, you would say, oh shit, we've broken down. It's over. We're dead. There's a grenade in the room. Run. Fire in the hole. Right? But the point being, no matter how you look at it, you can't go back up without having some sort of rising pattern, unless you pull a full V-shaped reversal and just God candle the entire downtrend back to the upside, right? Hey guys, be very careful here. If I show you altcoins, which you've literally never seen me do in history ever on my YouTube channel, because I'm a master of shill and dumps. And Daniel, you, sir, can go fuck yourself. Oh, I'm actually going to put him in timeout so we can come back in 5 minutes and talk some more shit. Anyways, here we go. Moving on to the Ethereums right now. Moving on to Ethereum. So we got the weekly chart. We're going to pull out to the weekly chart right now. Bye, Felicia. I think I had Bye, Felicia in here as one of my sound clips.
That's dope.
That's not it. No.
Bye. Bye, Felicia.
There it is. Bye, Felicia.
Bye, Felicia. Bye, Felicia.
Bye. Boy, bye. Anywho, so we got Ethereum here on the weekly. Now, it's what's interesting here that makes Ethereum look a little bit different. And I pulled these up. You can see they're called blank. Blank charts. They all are templated, I guess, with the 50 and 200 MA, which listen, I was never really a big MA guy. But you have to pull some obvious lines here anytime you start these. I can't wait for him to come back. So I can banish him again for 5 minutes and then wait for him to come back. Nobody wants a rising Bitcoin wedge, or even worse, a rising Bitcoin wedgie. That's bad. Anywho, so look, we had the all-time high here back in 2018, January. Oh my God, what a time to be alive that was on Ethereum. And it broke down, but we're back above it. So that's good and that's great, right? But what's interesting is that there, I guess we could pull this line right here would be the one that would say, oh, we were close to that. But this actually kind of bounced when you zoom out on the weekly in a no man's land here on ETH, right? Not the most predictable place for it to bounce unless you're considering it a front run of this high, this was the bull trap. Right. If you remember, you see those like classic charts of like the Wall Street chart. There's that top, then it comes back down and then it goes back up. That's what a lot of people are saying, that Dow Jones is only down 7%, right? People are saying that could be that dead cat bounce that you get. Let me see Wall Street cheat sheet. It's easier to talk about this. Got a copy of it here. Let's see. I don't know, man. I'll bring it over here. 1 second. Right. I don't know if you guys can see this well on here because I'm YOLO right now. Let's see if I can get that bigger. I can't, but here you go, right? You get the euphoria up here. That'll be the top. Then you get this big dip and then complacency. We just need to cool off for the next rally. That's the big bull trap before the drop. Well, I would venture to say if I pull up the Dow Jones chart, which I can now actually do because why not? We will see that kind of same idea, right? Let's look at the Dow Jones here. Yeah, I mean, listen, if this was the top, there it is. Oh, yeah, euphoria, complacency, and then depression and all that shit, right? I'm not saying that's going to happen, but you can see the argument for this being that dead cat bounce right there, right? Anywho, you guys didn't sign up to talk about stonks. So yeah, Ethereum, listen, I think now we have sort of a key resistance. If you're looking at the weekly, this is a very key level, right? Look, all three of those lows right there around 1,720. And then, of course, you have this low right here, which is where we broke down, retested, and dropped. So those are sort of your key levels. And then, of course, you can just get really obvious up here, something like that. I have some ETH charts drawn. This is interesting. This was the 4-hour chart. This is the one altcoin setup that I even put in the newsletter. And who cares? Like, whatever. I happen to be right on this one. But we had this ascending triangle, higher lows, coming up into a flat resistance. It popped and hit that target right there around 1871, right? So that's pretty good. Pretty good. Now it looks a little head and shoulders-y to be quite honest with you on the 4-hour. Let me see. I didn't look at this. That's a little head and shoulders-y. I'm not a head and shoulders guy. I think they're weak patterns. But here, the whole point of this is education, right? Educate yourself. Let's talk about head and shoulders since we have the opportunity here, right? Beep, beep, beep. Right, if you go in on the 1 hour, it'll probably look even way more defined. It looks shitty on the 1 hour, actually. But here on this, you can see. So let's just talk about head and shoulders. I'm not saying this is one. We're using this as an educational situation. But if this was a local head and shoulders, you need to see a few things to confirm a head and shoulders. You need to see a clear left shoulder, head, right shoulder, of course. Those are things we're seeing right here. But you also need volume confirmation. So you should see a spike in the left shoulder right there. A spike in the head we do not have unless you consider this the head. And then you need to see a major volume spike on the breakdown, which we potentially do have. So I would say the volume profile is almost there, but not quite. If you believe this is a head and shoulders, you would be taking a short position. And your target would be based on this, right? You have the shoulder to the head, tip of the head. You extrapolate that, you pull it down, and that gives you a target right here around 16,900, which would surprise absolutely nobody in the world because this area right here, let's pull off this. I'll just pull this area. This is your major demand, right? We just tapped this whole area right here. This is obviously support. You would call this kind of area support, but the main support of this entire run up here is this area. So if that happened if you were trading this and you like Head and Shoulders, which I'm not telling you to do, and honestly, go fuck yourself if you do something because you saw it on YouTube, because you'll come back and blame me. Hey, did that guy come back? I didn't see. You would buy the retest of the neckline. That's how it looks, right? Did the guy come back? Has it been 5 minutes? I wanted to talk to him. Anyways, so that's exactly how you do it. Don't do this, Yoda. Don't be so mad, Yoda. But yeah, so that's how you would be approaching that. But more importantly, we can go back and see why charts are perfect and they work all the time, because in this one case, it hit the thing. That's sarcasm, guys. Most people are wrong. The thing is, you go on Twitter, and I don't blame anyone, because listen, you forget 90% of the shit you post. But if you post 50 charts and then one of them's right, and then you go on Twitter and talk about how God tier you are and look how right I was, then it's kind of disingenuous, right? But it is whatever it is. I don't think he's bad. I don't think he's here. I just want to kick him off again. Okay. So that's the basic idea on ETH. I think ETH is really going to be driven sort of fundamentally here by the run up to the merge. I would say, honestly, like, let's go to the daily. Pretty bullish. This is pretty good looking, right? I mean, you're going to get, obviously, any move like this, you're going to get a lot of pullbacks. Those are weekly levels, obviously, that I had just drawn that showed up on the daily chart. But, this is a pretty bullish. Now, at the very worst, looking at this, see, like I said, when you're looking at a chart, you're looking to see where people are doing stuff, right? Well, there was a whole lot of interest here. This was accumulation. You obviously hear about that. And it broke out, right? So this area right here was kind of, that's not a straight line, I'm sorry, but you get the idea. This kind of area here, which also has this candle, this was never tested as support. So if we do get some major pullback, but it's still going to be remaining somewhat bullish, maybe this 1200 area I would be bidding, because DXY is pumping. Well, that's what's getting us then. So yeah, I don't know. I mean, listen, if you're Peter Branting the shit out of this shit right here, you obviously have another sort of one of these ascending vibes here, right? A steep, but it's still hitting support here. But those patterns like that look dumb. All right, guys, now let's get into the new shit. The next one is BNB. I pulled these all up on Binance, so a lot of them with longer history are not going to have it. But my thinking here was, let's just look at the USDT pairs, because that's what you guys are generally trading, and Binance probably has the most volume. Speaking of volume, holy dead, right? BNB's had a few spikes, but historic volume, even at the lows, like let's look at 2018, right? This is the area, if you kind of see, we've been lower than that for months here. So even when we have volume spikes, general volume was much higher forever. And obviously the spikes were exponentially higher. So not much interest right now, at least on Binance, in a lot of these coins. DXY is flat. I didn't check, so don't call me out for fake news. I don't know, man. Anyways, let's take a look at BNB here on the weekly chart. Now, we have some very obvious areas. Like, listen, this was the all-time high in 2019, right? Look at that. Okay. Price came. Can you see that? Can you see these lines? Looks like I can't really see them. Now I'm going to go look on YouTube, because I feel like I can't see that line. At least on StreamYard, I can't see it. Oh yeah, you guys can see it. Just I can't see it on StreamYard. It's very weird. Anyways, $39. I don't think we're going to $39 anytime soon, but you can see, as an educational exercise, right? That was a major top. Spent from June 2019 until December 20, year and a half below that line. And then when it broke, this is kind of what we're looking at, the 200 MA, not the trend, but seeing the repeated retests on Bitcoin. 1, 2, 3, 4 retests of that line, and then an absolute rocket, right? And that was the end of it for BNB. Just nothing but up from there. But as it topped here and had this sort of reactionary huge drop, this is where you got your support. And that's the support for this entire thing, right? Now, listen, let me actually do it a different way. You can call that support, but I would say that what BNB did once it reached the real high, the actual all-time high, is former range. Now, listen, guys, I'm just doing these charts live. There's going to be ideas that I present that I don't like, and then I erase. right? But this is how you would look at BNB right here, right? And how do you draw this range? You get the high and then the next major low before a bounce, and that's your range, right? And so I'll just shorten it to make it a little more aesthetically pleasing, right? And so you can see that basically it's been ranging from $691 to $211. Massive range. But that's what's happening here, right? Almost got to the top of the range in November of 21. We were trading that actually there. And now you can see 1, 2, 3 candles in a row swept the bottom of this range at support, right? And this candle swept this low that I'd showed you, right? This was very bullish, very big sign that you would see this move up. And yes, I'm talking in hindsight. I'm not trying to tell you what to trade here right now. Speaking in hindsight, because I'm just trying to give you an example of how to look at these charts, right? But when you get 3 bullish SFPs, I've talked about this before, you hear the term swing failure pattern. What does that mean? It means that price gets pushed to an area of liquidity and then bounces. It's intentional. Talk about it for a second. What is a swing failure pattern? This is it. We got 3 of them, right? You see this right here, this price action? This is probably an intentional push by a whale who wants to buy BNB. Seems weird, but it's been happening in markets forever. So then what you get support. And when to identify an SFP, you want to see a break below support, but then the candle closing back above it, meaning that the liquidity here was swept. Now, what is that liquidity? How does a whale know that if, I don't know, price is at 254, if I push it down to 205 or something, how do I know I'm going to be able to fill the shit out of my bags? For 2 reasons. 1, if people are long, are buying, their stop loss is probably right below this line, right? Your average retail trader says, if it breaks below the key support, that's my stop loss and I'm out. What is a stop loss if you own something? It's a sell order. What does a whale need to be able to buy? A lot of sell orders. So that's one way. The other thing is a lot of people who are looking to short wait for a break of support to short an asset. So you break below here. Shorts trigger like crazy. What is a short? It's a sell order, a way to fill buy orders. So that's the idea, right? Right? Yeah, that's the idea of this. So when you keep seeing it bounce above that support, that means someone's filling their bags and using that free liquidity to see price continue up. Oh yeah, guys, 1-inch jokes. We haven't made a 1-inch joke in a while. It's because it went down to like a quarter. Yeah, there you go. You just made the same joke I was going to make, Carl. I was going to say it went down to like a 1/4 inch. We had to go to the metric system for 1 inch. Sad. But yeah, so BNB, clearly this is really what's happening. You kind of have this, the 50 MA pointing down with the 200 MA still pointing up. We're going to dig into the daily chart. Pretty freaking clear here. So been under the 200 MA here since January of this year. Barely almost retested it and barely almost retested. So what's going to be interesting here after that death cross there, right? So what's going to be interesting here is going to see what happens if the 50 and 200 MA cross. 50 MA is pushing up pretty strong here. So you would imagine it's at 269 now, but it's going to keep going up. So maybe we drop down, hit it like 280, 290, and then head up. But I mean, yeah, the 200 MA right now, that's the story here on the daily for BNB. I wouldn't trade this below that line, but a break above the 200 MA at this point would be a massive signal that things could go up. Yeah, that things could go up. 10 cc, 10 centimeters, LOL, laugh my fucking ass off. Yeah, metric. It's 1 millimeter. Oh, you know, you're talking about, I thought when you said 10 cc, I thought maybe it was a misspelling for 10 centimeters. But 10 cc is, I'm not in love. You guys don't know about the band 10 cc, but if you don't, you're not from me and Chuck's era and you're not on our level. And maybe you should get on our level, right? BNB. So, this also still from the bottom has a series of higher highs and higher lows. So listen, you had this sort of, look at this, right? This was a higher high, higher low, break, higher high, and a higher low right at support. So you're looking not to go down below 274 at this point. We'll call it, to be exact, we'll call it 274.2 below, and you got this support coming up. So I doubt that will break, but that's where you would continue the path of higher lows. It looks like right now, looking at these charts, looking at Bitcoin, we have these series of higher highs and higher lows from the bottom back in like June, and we want to see those continue. So, listen, it was like, oh, bull market's back, bear market's over, bull market's back, bear market, it's over, bull market's back, bear. I mean, there's going to be pullbacks. We've had some bullish price action. Now things are pulling back, but I'm not seeing anything for right now that says, oh shit, new lows, right? Of course, it's a great song. It's a great song. Chuck brought it up. It's good. That's general thought on BNB. XRP. Also seeing a lot of coins that have had this sort of big move back to like key levels of support. If you're going to, let's do this one from a supply and demand perspective. Okay. So when you pull demand, if you want to do it at the most basic level, when you see people draw order blocks, supply, demand, what you want to do is you find basically the last candle that was down before a massive move up. That's how you find demand. So this is a huge candle right here, and it was the bottom of this whole trend. So you take this candle right here. You generally take the high of the body down to the bottom of the wick. On top, you would take the low of the body to the top of the wick, right? XRP. So this is your kind of key, major, bigly, hugely support. So that, where does that mean that supply is? Well, look at this right up here, right? This was your last sort of move up. Some people would pull it to there. I'll just say right there. And there's other levels. You got this key level sort of right in here. But these are your major, if you're looking on the weekly, supply and demand levels for XRP, and we're just bouncing between the two of them. But this has not been tested yet, unless, of course, you draw it like this. And then you're like, oh, shit, that shit. Everybody's got their way. You know what I mean? Yeah. But this does look like a bit of a rounding bottom here on XRP. Let's go into the daily. Let's take a look on the daily. Oh, well, here's your first positive sign, although it's done a dance with the 50 MA a million times. So it's hard to get excited about it, seeing as it's kind of basically ridden it every time it's gotten above. Right here, you would have gotten excited, new bull trend, and then you broke the 50 MA. Kind of the same vibe here. But once again, I tell you, it's happening all over the place. This one might even be a channel, to be honest. Yeah, it's pretty close. You get the idea. Higher highs and higher lows. There's another one. There's another one since the bottom. So unless like this breaks support down here, you really don't have to worry too much, or maybe below 32 cents here, if you're considering that the next higher low, which is fair. You could say that there's a lot of ways to look at this, right? So you could say low, high, higher low. See, I would say that this is the series. I would ignore these personally. So I think that as long as you're above 30 cents, you make, and then you'll probably still maybe bounce, 32 something at the bottom of this channel, looking pretty good. There's riding the EQ. That's equilibrium, that dash line right there. Looking at XRP from a macro perspective, though, listen, and this is what you're seeing a lot of them. Like, this is devastating. Look at that triangle. I got the magnet on. Like, this is not where you want to be. And this is what we're seeing in a lot of coins. We have this sort of reactionary bounce, which is great, potentially a new bull trend, but there's this major resistance of where the last breakdown happened, right? We see this much price action here, which you could say, hey, it's accumulation. No, right? And maybe it was a bear flag or something, or a bear pennant. This could be a bear pennant, right? Although I don't like these steep bottoms like this. Oh, crap. What have I done? What have I done? Let's try that again. Right. So you had this resistance here. And then you had this support that would be something like this. Right. And that clearly was that is a short enough to be a bear pennant, and then the breakdown. Right. So where that pennant formed is going to inevitably be major, major resistance on the way back up. Oh my God, I'm running out of time. Got to be somewhere like 10:50. So continuing on to 88. The bottom line is I think we're seeing a similar trend. I mean, this looks exactly like that, right? Look at that weekly on XRP. Had the drop and sort of this rounding bottom we're talking about. Oh, we got a big drop and sort of a rounding bottom here, right? So let's go in the daily on 88. We're going to do dailies. So listen, you can just do these, by the way. If you're looking for like V big breakout, you just draw these lines from the top. First 2 points, get above that line, looking pretty good. I would say that you're obvious. So look, anything below this, I mean, this was the most predictable place ADA could have ever bounced on the daily. Because look, you see this like levitated straight up. There's no support in there on the way back down. This is where the support is. And that's, oh, look at that terrible line. Let's say if we were doing it from a supply and demand, something like this. Right? So above it, you could draw this whole area. You know, if you draw it like from here, if we're just calling it support, this would not be demand. That's exactly where you should bounce, right? At the top of this cluster of price action right here. And now it's basically just trying to accumulate above that. But again, that leaves a fucking ton of resistance above. We're a long way from starting to talk about bull markets. But I mean, there's your line. That's your line. Okay, that's it. 68 cents. Anything below 68 cents, we're just chopping sideways in a continued bear trend of lower lows and lower highs. But I mean, that doesn't get much more clear than that support being rejected right there. That's it. And maybe when you're getting above that line, you're actually starting to talk about this descending black line as well. And if you want to draw it as, if you want to see what the accumulation looks like, you just pull a little range here. Oh, my magnet didn't work there. Hold on. Try that again. Is this helpful, guys? I don't know. I'm just doing stuff here. It's been a while, right? So there's your range. That's it. Chopping sideways. Chopping sideways. I'm just going back to your comments. Not much happening there. So yeah, I would say that is kind of how you would look at this. So, you know, we're not day trading here, right? And if you are, to be frank, you're in the wrong place. Go watch someone who does that. Like Trader SC, Nebraska Gooner, these guys are awesome. They're, you know, identifying probably much lower time frame levels. I used to do that here. I don't want to encourage you guys to take a bunch of like 4-hour chart leverage trades. And frankly, I think you're just going to probably get wrecked. We all would. I was taking longer investments in trades, you know, swing trades on the trend. Well, you don't want anything to do with ADA or any coin in these areas, right? Like if you're like a patient trader, you're looking for this long or this short, right? This would be your short entry, would be that break. And that's what I'm talking about. You got to be careful. Remember when I was talking about the SFP? You don't want to be the liquidity when a candle comes down and bounces. But if you see candles closing below here, then you sell the retest of that, right? That SFP only applies when the wick goes down and the candle closes above. So you just wait for the candle close. If it closes below support, that's a very good signal that you can short that when it becomes resistance, right? So these are trades you're looking for. Just like you can literally set an alarm on the channel. Watch me whip and watch me name it. Take an alarm, exiting channel, switch from entering channel to exit channel, create an alarm. That's it. I don't ever have to look at this chart again. If I was trading it and looking at it this way, I can just wait till my alarm goes off and tells me that it's exited to the upside or to the downside. Yeah, that's it. That's it. Solana. I wish I owned some Solana, but Voyager. Let's think about a way to look at Solana. This is the weekly. Let's do dailies. Weekly can be a bit long for altcoins. Okay, so look, I mean, same idea, right? You have this area, massive move up, area never retested through all of these moves up, right? Came back down, tested that area. Not that surprising that these are the areas that we've found these sort of macro supports. That doesn't mean these supports will hold, but this is the area that you expected things to stop, right? Still, now this is getting really tight here, to be honest. You still have these sort of higher highs and higher lows from the bottom, the same pattern, right? Up here, up here. This made a slightly higher high. This was the next low. So anything above 34.68 or so remains a higher high. Still holding above the 50 MA here. What do we do? I mean, you could draw a range here, but it's broken above. So I don't think the range is particularly applicable. Now you can definitely draw some sort of rising wedge. We know that. You know that's going to be a thing. Bullish or bearish. Wow, we'll see. None of it matters. Oh, this is actually perfect. This is very more clear cut than any of the other ones, right? Now, I think if we want to be genuine, we would say first touch, second touch, third touch. 3 touches on a line confirms it. Yeah. Oh, you got to set the alarms. The way to not have to look at charts all damn day and see where they're at is just set alarms. Just set alarms. Yeah. So there's a very clearly defined support, which is going to be tested imminently, right? So then you can start worrying about Solana, maybe going back down to like 25 if it breaks down to those lows. But right now, yeah, I mean, nothing to do. Hey, look, watch. Wrong. Alarm. Crossing. Trend line. Create. I'm done. I don't have to look at it. We can close it. Oh, it already went off because of that touch there. But zooming back out, like I said, this was super toppy, rounded off top, breaking down. You're now testing this whole area. The next area that's going to be devastating is this whole area right here. If you get up into the $70 area, which by the way is still really far from the all-time high, that's going to be an area that's going to be very brutal. I'm going to start cooking through these a little faster because I got shit to do, you know? Doge, same thing, right? Boom. There's your support. Super easy. Super easy. People were, I mean, I don't have my old chart, but like people were saying I was nutso when I was saying that Doge was coming back down to 9 cents. By the way, if you were here, I was saying that when Doge was over 70 cents. I called this the short opportunity of a lifetime when Elon Musk was going on Saturday Night Live. I said there was never a more defined top and opportunity to sell the news than that. My aunt, who knows nothing about crypto, called me on Saturday morning and said, should I buy Dogecoin? I hear Elon Musk is going to promote it on Saturday Night Live. And I said, no, maybe no. Right? Not, I mean, she's wonderful, but those are signals, right? But like, yeah. So I said that this was it. This is the support, right? Let's look. Here's you want to do the demand thing? Right? Look at that. Look at it. Retested the top of that demand, heading back up, sort of a rounding bottom. I would say that your major resistance here is going to be like this 10-cent area. Although we could, no. 8, there it is. That was the 9. That was actually, okay, that's even lower. The 9 cents, it went way below. But the reason I was saying 9 cents was because of these highs right here. Right? Now it's below that. So that's bad for you. It's not good for you. So I would say that your long signal on Doge is a break of that and retest, right? And if you're going to short it, you could short it here as a test of resistance. You could absolutely have shorted that in the last few days, or you would short a breakdown below that, right? But I would say, I mean, this is if you are someone who just, longs support, nothing wrong with that, and shorts resistance, you shorted this at 8.087. Okay. Right. By the way, Doge has no business being higher than a penny ever. That was the top 10, by the way. Here we got some pretty, let's do dailies. Weekly is just a bit long for these. All right. Here's your, let's see. By the way, I'm using horizontal rays here, if you're wondering what those are when you go in here. Right? This area was the top in 2020, was never retested as support until June. Yeah. Right? Quite crazy. again, these all, we have some pretty nice like rounding bottom formations starting to form here, right? That's what you hope for. You hope for. Most of these are above the 50 MA. Most of them probably come back and retest it. But not looking terrible. Let's see resistance here. There. Oops. There. Ish. It's not going to be perfect. Like, you know, lines, it's important to remember, lines are zones, right? Yeah, every chart the same, to be honest. That's how this happens, right? Because all coins are basically the same. Yeah, it's kind of like in this area. Now, if you wanted to see a reason looking back, and this is something that I'd drawn before, had this, right? All of these coins, you have the low, right? And so then you start your new trend line at the next high, right? All these coins were in some sort of descending wedge or descending broadening wedge. So this should be going at least to $11 based on that pattern, right? But all these coins had this. They broke out, kind of came back and retested, got above the 50 MA. Now we're getting a bit of a pullback in this cycle. But we're just leaving a lot of these sort of more bullish patterns that were happy on the bottom. There were a lot of inverse head and shoulders as well. I'm not that worried about altcoins, but I'm not that interested either. How come all charts are same? Because Bitcoin drives the crypto market, and almost every altcoin moves based on how bullish or bearish people are on Bitcoin, because people rush in and out of their altcoins like spastic weirdos every single time Bitcoin coughs, right? And so when they all hit the bottom, there's either a general sentiment that people are like, altcoins are safe, or a general sentiment that, oh shit, I got to get out of my altcoins. And so they all look like some similar variety of the same idea, right? So, yeah, I mean, listen, this broke out. You have a target of this. First of all, this wedge is confirmed. Low, high, low, tap here, break. Although you want them to be alternating, and you kind of have two highs in a row here. So pattern still remains, but for it actually to technically be valid, you would want to have seen a low between these highs, which you don't. But the idea is there. For a pattern to really be confirmed, you need alternating touches. High, low, high, low. This has low, high, high, low. Like a song. Anyways, if you're looking for a very local entry on DOT, you'd be looking right around off this high, probably $8. But really, you want to get back, I think, above $10 and start heading up. I don't know. Shiba Inu, do we need to? Oh, obviously. Excuse me. Looking at Shib. So I would say that if you are a Shib bull, I mean, this area is bananas resistance, right? So you're looking for a drop down. I can't even read this. There's like 7 ones. 0.1306, right? Just broke out of there, has not tested it as support. I'm not saying it has to, but your trade that you're looking for is that, because that's a god tier entry if it comes back. You had one that breakdown, retest, touch there, perfect touch there. That's it. And you're going to find mucho massive resistance in this area. You choose where in this area. Okay, well, first of all, look at that if you want to see why it was rejected. That's your spot. Okay, so here, let's just talk about long entries. You have 2 long entries for Shib. I don't know why the lines are looking so trash. Maybe if I turn the magnet off. I don't know. No, there's something going on with my computer that's making my lines look weird. That's what you want. You either need to break above this level, 1704, and retest as support. That's your higher long entry. Or you wait until you drop back down to this support and you buy it. You have a plan. I'm not buying Shib. I'm not telling you to buy a Shib. Fuck Shib. I don't care. Sorry, bro. Get off it. Someone's going to edit the video and be like, Scott Melker is shilling Shib so he can dump on newbies. Just telling you, this could be a chart for fucking Enron for all I care. Right? But these are your 2 spots. You either take a long above this resistance. You don't want to be messing around with anything, or down here at support. That's it. Super easy. Gonna do one more and then we've got to get out of here. Same thing, guys. Drop, rounding bottom, kind of Avax. You do need to add this segment. Some coins with good fundamentals, one, add for long term. We all know the top 50 coins right now, but you're invested since long ago at all of this. I mean, I don't need to do anything except for, I guess, stay white, die, and pay taxes. Yeah, man, there's great coins with fundamentals. That's amazing for long-term investments. We're looking at charts right now as traders, not as investors. If you're an investor, here's the thing. If you care about fundamentals, you don't care about charts. If you care about charts, you probably don't care about fundamentals, or you need to separate the two completely in your mind, which is very hard to do. If there's a coin that you believe in, a project, you're like, I'm an investor, it's long-term, don't look at the fucking chart. Just buy a little bit every Monday. Dollar cost average, don't be an asshole, whatever. If you're going to trade it, fundamentals in this market mean dipshit fuck nothing. I don't even know if those are words, but literally nothing means nothing. Like I showed you, everything's going to move kind of the same and you'll find the outliers. And if it's alt season, something pops and you look for a chart that looks exactly like the one that just popped and you do that, right? If you're going to trade it in this market, the fundamentals bad. Just look at the chart. Yeah. Don't forget, it's whatever. Yeah. Yeah. Actually, guys, I want to do Avax, but I gotta go in a minute. I really gotta go. I got important shit to do. So listen, that's yeah. DCA if you want to, otherwise trade. And if you're going to trade, but you view yourself as an investor, just trade with a little part of your stack and do it with the assets you're not investing in. Right? I mean, I get why you would want to do this, but this complicates things so much. If you're an investor and you believe in something long-term, just never look at the chart. Like it's so hard for people, not you specifically, all of us to separate these things, right? Like how many people do you know that are like, Bitcoin is the most important asset ever created. You should buy it for your kids, for your retirement. You never sell it. And then they're like, but also like, what is the 1 hour chart doing? I need to know. If you believe that Bitcoin is for your retirement account, who gives a shit about the chart? And who gives a shit about a bear market or a bull market or what's happening? You're just buying it when you can for price. You're pulling a sailor, right? So if you're going to look at the chart as a person who invests for 30 years down the road, you need to be doing it with a completely different lens and a completely different portfolio. Imagine this. I say this all the time. Imagine if you were like, I'm buying my house to live in forever and my kids will one day live in my house because, I don't know, we're fucking farmers and they're going to keep farming our land because that's a thing now in 2022. Either way, but then you had to look at a daily chart of the value of your house. Would you ever do that? No. Right? Your investment should be looked at the same way that you would look at your house. Yeah, I think Ice Cube said that, but it might have been Ice-T in Colors. I'm not sure. Or New Jack Hustler. Anyway, guys, so listen, we're going to be... I'm bringing charts back, but I want it to be more of an educational thing, and we can discuss them together and look at them and see what they look like. I definitely am not right now because of the market, not because we will not get back to this, but I'm definitely not being like, I just won't, honestly. Next 100x altcoin gem, because then we get the fucktards in here talking about I'm shilling some shit when frankly, like my funds are the funds I would have been trading with are sitting on Voyager like a dickhead anyways. So I'll just go ahead and be clear. I'll show you all these charts, tell you what could be a good trade. I ain't trading any of it right now. So have fun and don't expect me to like give you a fucking update when the time comes. There's educational content. Learn to chart, make your own decisions. Of course, guys, before we get done, check out Bullish. Check him out. Check him out. Check him out. Scroll it. Scroll it. Suren's awesome from Bullish, isn't he? Love that guy. Great guest. Oh, wait. Tomorrow is a roundtable. Mike, who we got on the roundtable? I got to check my calendar. It's going to be awesome. I know. It's going to be amazing. Is this accurate? Do I have... Listen, I'm just looking at my schedule, and maybe I wasn't even aware of this, but I see that we definitely have on my schedule Raoul Paul and Anthony Scaramucci for tomorrow. Shows you that I've been a bit out of it if I didn't realize that we had that epic of a roundtable coming tomorrow. But holy shit, show up. Gonna be absolutely amazing. Thank you guys. I have shit to do. I gotta go. Peace.
That's dope.